Monday, December 14th, 2020, Maneco 64, home of alternative economics and contrarian views. So for those of you who think there's no inflation, that we have a deflation threat, this video might not be for you, but you might want to listen to me because inflation is growing at a rate of 65% year to date in the United States. And you might ask, what are you talking about? The Fed says it's growing at less than 2%. They're really worried about deflation. Well, we're going to look at the true definition of inflation. And I'm going to take some pretty mainstream dictionaries. First one is the Oxford English Dictionary from 1925. Under the word inflate, it says to abnormally increase state's currency, especially by issue of inconvertible paper. What does inconvertible paper mean? Well, it means fiat currency. It means paper that's not backed by anything. You could, of course, prior to 1933 in the US, prior to 1914 in the UK, you could take your banknotes and have it converted at a fixed rate for real money, gold or silver. You can't anymore, of course. And then we look at the Merriam-Webster from the early 70s. Of course, we were under a fiat currency system by then. But it says, an abnormal increase in the volume of money and credit resulting in a substantial and continuing rise in the general price level. So there you go. And you might be asking, well, where is this inflation? Well, the Federal Reserve is reporting it, the St. Louis Fed. And I've been talking about this for the last couple of weeks because M1, which is the currency, of course, that you hold in your pocket, the currency in checking and banking accounts, is going through the roof here, especially in the last 2 weeks. We're first going to look at the whole chart, maximum length of chart that they've kept this statistic on M1, and it goes back to 1975. So you can see how it's abnormally increasing here. From the end of last year, it was below 4 trillion. We're now fast approaching 7 trillion M1 money supply. And in the last couple of weeks, as you can see here, it's jumped up quite significantly from around 5.7 trillion on November 16th, now to around 6.5 trillion by the end of November. These are the latest data. Of course, it will be interesting to see what happens in the beginning of December, but I do think it's probably gonna keep going up, and that's an abnormal increase in the supply of fiat currency, right? And it's gonna result in a massive rise in consumer prices because that money now is sloshing around in people's bank accounts. I'm gonna do an interview with Rafi Farber of the Endgame Investor on Wednesday, and we're going to touch upon also M2 and compare M2 to M1 and what happened actually in the stagflationary 70s. He's done some research on the money supply as well, Rafi, so I'm going to leave that till then. And now I want to look at some data, very long-term data, because there's a lot of distractions out there about Brexit, about the Electoral College today, Germany going on a full lockdown today as well. And people are taking their eyes off the monetary ball, so to speak. And it's really important to keep an eye on that, I think, personally, because every commercial transaction you do in your life, half of that transaction, you need to use the currency that you're forced to use. And I've looked at the Bank of England, they call it the inflation calculator, but I would call it more the cost of living calculator. And it's amazing because the data from this Bank of England calculator goes back to 1209, so a very long time ago. And I've written an article here for a publication in the north of England. It's going to be published in their magazine, the Tyne Valley Express. in the beginning of next year. But I've got some data from that article. And I looked at a pound in 1209 and compared it to the pound in 1914. Why 1914? Well, it's because when we went off the gold standard because of World War I, it's when the inflation really century began, in my opinion. It was also the year that the Federal Reserve was created. Is it any coincidence? I don't think so. But anyway, in 1914, you needed 17.65 pounds to get what you could get with a pound in 1209. So yes, there was a debasement of the currency, but it was over 705 years. So you could maybe excuse the British state for doing that over 705 years, even though not very good, right? But anyway, I wanted to compare it to now. So if you go from 1914 to 2019, which is the latest year that they've kept the data, we now need 2,051 pounds 99 to buy the equivalent of 1 pound back in 1209. So you can see how this has been a century of inflation and debt and war, unfortunately. You would have thought with all the technology that's been created, all the advancements in science and everything else that we've had, that the pound would stay very stable. You'd think they'd be able to fix things in the monetary sphere. But no, we've gone completely backwards in terms of monetary affairs. And I think we're reaching a point where all these fiat currencies, the pound, the dollar, the euro, they're all going to disappear, and they're going to go to where Voltaire said they usually go. Fiat currencies usually revert to their intrinsic value, and that's zero. And that's why you need to not be too concerned about the movements in the fiat price of a gold, silver, or other commodities right now versus your national currency, because it's all short-term noise. Back in 1914, you needed 4.28 paper pounds or promissory notes to get an ounce of gold, and now you need over 1,366. So the tendency and the trend is really not good. Yes, we're seeing the pound rebound today because they think they might get a deal for Brexit, but that's just short-term noise. The dollar as well has lost, like, I don't know, 97% of its value since the Fed was created. And I looked at the money supply figures as well since the collapse of Lehman. That was September 15th, 2008. And the money supply, M1, is grown by over 350%. And the price of gold in dollars has gone up by over 130% since then. It's gone up over 250% in pounds. So yes, don't be fooled by those people who say there's no inflation. And yes, we will get hyperinflation. We will get a collapse of the currency. And I think we could be in the beginnings of the collapse of the currency. And it doesn't take too long. It's like a parabolic event. It's not a linear event. And if you're not prepared for it, you won't be able to prepare. And that's what's going on out there. And yeah, M1 is like a canary in the coal mine, I think. It's pointing to monetary destruction right ahead. So with that, let's look at where the markets are this morning. It's 8:35 a.m. London time. As I said, a lot of volatility in the FX market, especially as it pertains to the pound or sterling. The pound is up over 1% this morning at 133.95. The range has been very wide, 132.20 to 134.08. It's moving around like a third world country currency really right now. Gold is down $10 at 18.29, down 0.5%. Silver is down also 0.5% at 23.80. As I said, this is just short-term noise. I really think personally that one really needs to hold on to his precious metals, or if they don't have precious metals yet and they have a lot of fiat currency savings, they need to think strongly about acquiring some of it because, as I said, hyperinflation, which is the loss of confidence in the currency, happens very quickly. And when it starts, it's too late to get out of the fiat currency. You have a very tough time getting hold of real money. What about the stock market? Yeah, the stock market, despite all the uncertainty, lockdown in Germany now, the biggest economy in Europe, lockdown almost everywhere else in the Western world. The Dow is up 195 points, 2/3%, 30,230. But I think that's also a reflection of the dollar and all the fiat currencies sinking. It has to flow somewhere, the money, and it flows into the stock market. But I think it's not a safe place. I'd rather be in commodities, in real tangible goods. They're still vastly undervalued relative to paper assets. They've been the most undervalued, as we know, if you've been watching my videos, for like 120 years, maybe more. S&P is up just under 0.5%. NASDAQ 100 futures up 0.25%. FTSE is up 0.25% as well. The euro is strong this morning. It's up about 0.25% versus the dollar, just below 121.50. The dollar is down 1/10 versus the yen at 103.90. And the dollar is down 1/3% versus the Chinese yuan at 652. WTI crude is up 1.2% at 47.28. To finish off, let's look at the 10-year yield. 10-year yield is at 0.91. It's up 2 basis points. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Parler, and all these other platforms below here. I wish you all a great day. Take care. Bye.